Okay, how are we doing, guys? Probably, yeah, let's go to ex ante. Okay, so when you have ex ante open and with your account logged in, fine. Is anyone going to go with Tesla? No? Okay, I'm going to go for it.
I was thinking of Tesla, but I'm not sure.
Do you know, Matt? Because I've got €1 million. Have you got €1 million as well?
Well, I don't have an account.
Yep.
I just realised I don't have one. I just won't do it. I won't do it.
No, don't worry. Guys, have you got €1 million in your ex ante accounts?
Yeah.
Okay, good.
Well, should we do
Biggest percent.
biggest percentage increase?
Yeah, the thing is that if we need to make plenty of numbers, it's going to take some time. So let's do only percentage change of you guys that are with phones. To the ones, we will try to make as much or as close as the £1 million or €1 million. Alright, guys?
Wait, what? What do you mean?
I mean, imagine 1,000 shares. If it is 998,000.
Okay. Okay.
That's
So has everyone got it that wants this? Yeah. Right. So, do you know? Do people know how the platform works? Shall we show you quickly how it works?
Okay.
Okay. Do you want to
Go for it, Matt.
Okay. So, basics of the platform: search bar on the left. This is where you type in your stock. So we'll go Tesla, say. Then you're gonna have like a list of things here. So, Tesla on the Frankfurt Stock Exchange. That's not what we want. I don't actually know what that is. It's probably something else. But Tesla's on the NASDAQ, so there's other things here. So if you double click that, then it will come up with a chart here. So you've got your candlesticks here. Does everyone know how a candlestick works? So if you just hover over this, you've got, this is like open, high, low and close. So basically the candlestick represents where it opened. So the top of see the really thin line, the really top bit, that's where, that's its high. And then the bottom bit is low, and then the sort of the box in the middle is its open and close. Is that right?
Yeah. I mean, opening time, closing time.
Yeah.
Yes.
But obviously, so if you look here though, where it says 1 hour, this isn't actually like the market closing. This is just the end of that 1 hour. So you can then change this, if it lets me, change it to a day. That's what I often do, because obviously if you go on an hour, you can go on a minute or whatever. It's like bouncing
which we will look at this today.
If you look at it on the bottom, it's like 5 o'clock. This is literally just in the space of an hour. It's moving all over the shop. Change it to a day. I think it's easier. But yeah, we'll go on to more of this in a minute. So basically, you drag your stock. So from here, look, and you just drag it over to this right side. Has everyone got that?
Or right click on
right.
Tesla and click trade.
Click trade, yeah. Is that how it works for everyone? Yeah. And then
Yes. Okay, and we don't have the click trade, but if we click there, we can do the trade. I don't know.
if you just click that, it should pop up on the side.
Is there any other window anywhere? There we go. Okay. Does anyone? Yes.
Can have a bit of it.
Yeah, no, so you've now got the stock over there, and then I'll explain to what's next in a minute. Are you guys all sorted? Yeah, so if yours like you'll just go time in the quantity and then click button.
Okay, that's fine.
Okay,
so now you have to go to the right of this day order, and you need to kind of make some numbers. So you have to approximate this value in dollars, which is quite unfortunate because we need to make but if it is in dollar, what, Matt? 1,050,000 or so.
Yeah.
So approximate this to, so more, let's put here 4. So this one will be, I mean, it's gonna be fine. I don't know why I'm getting this.
Yeah, I think it'd be easy. We just do like percentage change in whatever the currency is you bought it in. We just put your trade on and we can worry about that later. Just put on whatever quantity you want, as long as you've got enough money for it, and we can work that. Yes.
What is the value there again? Because I'm not getting anything from it.
Okay.
So, can you type in quantity on yours? So, so if you start typing a number to number of shares you want, and then the value
Yes,
of that comes up.
absolutely fine. Absolutely fine.
So, do I start?
Okay. Just a second.
Yes. Okay.
Is everyone ready?
Okay,
More or less with.
So you'll know what you're going to put your investment in, yeah?
Yeah.
Pick the company. Doesn't really matter what company it is. It's just so you can see like what happens. Okay.
And then we need to click ask.
Are we wanting it to go up?
Yeah.
Yes, up.
Buy. I don't really mind if you want to click sell. What do you think, Gonzo?
Okay, yeah, let's.
Fine. Yeah, you're allowed.
Yeah.
You can short if you want. Just
Yeah,
click sell
yes.
if you. At the end of the day, it's all fake money, and it's not really care. So it's just just for the sake of it. Okay.
Everyone ready, guys?
Everyone done?
Okay. So
Just
1,
do it.
2, 3.
Oh, what a lovely sound of Exante. You got your trading disabled. Yeah.
Come on.
Because
It's technical problems.
you
An account, yes, my account, of course.
Markets and you buy the market price.
Place in order. There we are.
Sword. And you put the trade on.
Okay, let's put this in 5 minutes.
Okay.
I'm not sure what I'm
This is so weird. I don't know why.
Yeah, you bought it.
Anyway,
Can I sell?
Yeah, you sold it.
so there we are. Now, accounts
Are we on?
summary.
So where do I go to check out?
No, buy anything you want.
Oh, I
Type in any company you want.
Okay,
Yeah.
yeah, that's.
Yeah. It doesn't really matter what company it is. Like if you want to try and win, like some goals, we got some sweets.
Okay. Why do you think I'm already losing money, Matt?
Huh?
Why do you think I'm already losing money? Probably because of the fee or anything like that.
Yeah, no, there is a fee when you put the trade on. And
Okay.
then also, I mean, you put €1 million on like 25,000, isn't really that much. Well, what is that? Like 2%? Not 2%?
My question is intraday trading not allowed in the US?
And trade.
Yeah. Is that not allowed?
Okay, that's fine.
I'm pretty sure it's allowed in the US.
That is fine.
Okay, so you've got a trade on. You got a trade on?
We're going to connect, so I've wrote down the number 295 myself. Now it's like 295.95.
Oh, because it's exactly going to connect.
Yes, I'm connected.
Oh, that's weird. Okay. Have you got a trade on?
Data is delayed at least 30 minutes.
Trade on?
Yes. But I mean, fortunately, everyone has the same. I don't think it's not that. Some of us have the real time, and some others.
How much did it?
30 minutes
It says at least. But that's because of the demo account, and that is, as far as I'm concerned, all the trading platforms, demo accounts have some kind of delay. And the university and money you also have I think that's a lot.
It is a lot.
Anything I work of. Practice with client, yeah, great. Pharmacy.
Oh, okay, actually,
We're
put
still
this
on
in.
We can buy only one stock?
Yes.
What is this?
Next day, if you want, 2, 3.
You know what this is?
We're going to keep it simple today.
Fine. Okay.
Uh,
Everyone got one? Cool.
Like the one you
Tesla Mat.
Oh, I haven't done one. I don't have an
You
account.
take part in the.
I don't have an
Do
account.
it with our. Do it now with our. Yeah, with that one. Do it. To Facebook or a bank or.
Okay.
Yeah, actually, let's put the TSLA to see them. TSLA.
Okay. Should we just get onto the presentation? I feel like we're going to take too much time.
Really? Okay.
Yeah.
Fine.
That'll take a while. Okay, let's go. Okay, we're going through the platform now, yeah?
Yes.
Okay. Right. So now we're just going to run through a few other things which are useful that we use necessarily. First thing is top right corner. If you want to, you can turn the trading on or off. So if you want to just play around and not accidentally click on buy or sell something, you can turn it on or off. So if you ever find that your trade's not going through, it could be because this is turned off. So as I said before, you type in the company here. So now let's just do JP Morgan, say. Oh, not spell, if I spell it right. More Gonzo, your computer. Okay, it's not coming up. Brilliant. JPM. Okay, JP Morgan Chase. So double click. Let's come up here.
First thing to take into account, make sure that you are in the right index. Because as you can see, you can have
there's loads of stuff here.
The same stock in different indices.
Yeah. So, I mean, I think JP Morgan are only listed on the New York Stock Exchange, but they've got like all this other stuff like they are not Frankfurt, sorry, as well. Listed in Frankfurt too. Yeah.
What is that gap there in between? Is that a sudden drop or is there something?
This gap here.
Yeah. Or like gaps anyway.
It's just like when it shuts for the day and then like reopens at a lower price or higher price, because like you can't do it on Exante, but like you can sort of like do after hours trading as well. So that sort of moves the prices around. So then when they open, it might be higher or lower than what it closed at the previous day. So yeah, as I said, you can move the 1 day, whatever, to or however many days you want. Then if you drag this over to here, as I said, so you type in our quantity. So here, look, so you've got day order or GTC order. Does anyone know what GTC stands for? So GTC is like good till cancelled. So when you do a day order on 100, so we're doing buying 100 shares in this, you're buying it at the market price, so it's whatever price the market gives you. Like you're not saying a specific price. Whereas if you do, and it's only, I'm telling you the wrong thing. Day order is it's got to happen on that day. If they can't find anyone to sell you those shares on that day, then it won't go through. The good till cancelled order is that order is going to stay there the whole time. So, like certain stocks, like in order to buy a share in something, you've got to have somebody else who's willing to sell it to you. Like they don't just come out of thin air. So if there's nobody around that wants to actually sell it to you, then you can't buy it. So
one thing probably when I bought the stock, I bought it a lot more expensive because if it is very volatile, the spread of the platform is very big. So the platform to have kind of a seller of that stock that I want to buy, make sure or knows at what level more or less there is a seller. And that is the price that the platform gives me, which was horrible, but I mean, it's fine.
The spread is the difference between these two, so the price that you buy and the price you sell at. So that's how like the platform this is obviously fake money, but in real life, that's how the brokers make money, by there being a difference in these. So the price you can buy at will be higher than what the price you'll be able to sell at. Does that make sense?
Yes.
Yeah? Yes.
So the platforms that they use are exactly like this, or like at least very similar to this?
Very similar to this. Yeah.
Okay.
Well, because Exante has a real version as well where you can put real money in it. So we've got demo accounts. You can have a real account with Exante, I believe. So with that, that's how Exante, the real company, makes money. Because you said you had a phone call, didn't you? Asking if you wanted to. Yeah.
I would say yes.
When do you know when you said when you put a day order? That's not someone has to be willing to sell it down.
Yeah.
So when do you know when you actually got those shares?
Okay, so good question. So you'll know when those shares are there because it'll say current orders. So they're the things that have happened, and it says like filled. So that means it's actually happened. You can say it says current orders. I'm not sure if you'll be able to see it very easily on your phone. But you can it's along the top as well here. Look, current orders, and it then pops up on the bottom. So it says filled. Then the thing that I look at most is account summary. So if you look on the top, it says account summary, and you've got here a list of all of, there's only one here on it, but if I just go on to, have you got the slides up on here?
Yes.
So like here, the account summary for us looks like this. So here's like the list of our things. So you obviously got like the price you paid, the price you paid, your average price. Or what's happened here?
I don't know. Click here and click again. What? Yes.
Yeah. The quantity price, average price you paid, because so it's the average price because you might not have, like say you want to buy 1 million shares in something, you're not going to be able to find one person that's got 1 million shares to sell to you at that one specific price. You might have to buy like 500,000 shares from one person for £74, 200,000 shares from another person for £73.80, and then the average is the average price you paid.
And you can see exactly that if you go now to the chart in 1 minute, for example. Go to the chart of Tesla, yes. If you go to 1 minute, this...
Yeah.
Okay, ignore, okay. Yeah, probably those were the ones that made my price horrible, but more or less when you buy such a big amount, so it has to be spread out in between different lots. So here you have in between 745 and 743 or something like that.
Exactly. So green chart bars on the bottom. I don't think you guys will be able to see that on yours. Can you see it? Yeah. So if you go on the little settings coggle here, settings, indicators. You've got a list of loads of things here.
That's very professional, that.
Yes. One of the things you can do is go volume by price or volume just normal. So if you go volume normal, it like moves it to there. You can change the colour, make it something pretty if you want. I don't know. And then you've now got the volume. So that's just the number of shares that are being traded on that day. And I don't know if you remember, like, because this is a demo platform, so trades almost always go through. Like last term, we did a trade on like Woodford, and we bought like 200,000 shares in it, say, but the volume normally was only like 30,000 a day. So the platform, because it's a demo account, just like allocated you some like ridiculous price. Like in the real world, like if you want to buy loads of shares in this company, it might be quite difficult if the volume's pretty low. But also like the volume is a good sort of indicator of how volatile markets are. Like if you look at, oh my gosh,
do it again. I think when we are recording that happens. I think.
Okay. So like, so I'm on the 1 day here. Look, where's next last week? Oh, it doesn't really show you very well on this. It's not really very clear.
If you put it maybe in 5 hours or 1 hour, you might see that better.
Basically, what you'd see is that last week when there's a lot of shares changing hands, there's more volume, basically. Okay, what else can I show you? Okay, so take profits and stop losses. People remember what they are?
I think stop losses is when it reaches a certain value, it automatically sells.
Yes. So if you want to put a take profit or stop loss on this trade, you see this little TP here,
which you should always put down.
Yeah. So take profit, so you can do price. So then obviously we're going to buy at 105, so we might want to do a take profit of say like 110. I don't know. But then you can also do like change in price. So that would be like a change of, say if you think, oh, once it's gone up by 10, then it'll sell at 115, say. And so take profit is just like when it sells, when it goes up and you made money. And then stop loss, just the same the other way around. So you need to make because if you say like now we tried to put a stop loss on of 110.
Yeah, put it more or less. Okay, no, but is this Tesla?
Yeah, it won't let you do this because that stop loss is above the actual price. It won't work. Sorry.
No, sorry, but why do we have 105? And this is not Tesla.
Oh, this is not Tesla. No.
Put the for them to see the stop loss.
Mm.
Yeah, good.
So, say we just do it now. 100 shares Tesla, take profit, 760. Stop loss, 740. Buy.
Oh, that's very. Okay, yeah, fine.
Yeah, and then it shows you here. Look.
Put it maybe now in 1 hour or 30 minutes. So now we have that green line is. The green line is.
The green line is what we paid, and then the two orange lines are the stop loss here and then the take profit here. Was there a question?
What is?
Yeah. Do you guys have a fixed percentage that you put, or like is it random? Do you just put?
Well, it depends on like what your account value is. Like, so for us, we'd never what's our stop loss with our strategy is 10% less, because
Yes,
that's your theory, isn't it?
Less than 1% of your whole capital. That's quite important. Yeah.
But I mean, it's just completely based on your risk appetite. Because I mean,
if you have £10,000,
yeah,
don't risk more than £100 on each. Sorry, don't. Yeah, your maximum loss cannot be more than £100 on each trade.
Because I mean, like last week, like we had loads of our stop losses being triggered, which is obviously good because it stops you from losing even more money. But if everything bounces back again, then we might end up buying it back again at a higher price than what we saw it before. So yeah. So you see, order along the top. So you got click trade, which is what we did before.
Sorry, man. Now I understand what is this sell and this sell stock. The thing is, both are in red, but this one is this red sell is the take profit, and this sell stop is the stop loss.
Yeah.
So we bought more or less there. Our average price, I guess, is in the middle. If it goes until here, we are supposed to make money, and automatically the platform will trigger the take profit, and the same for the stop loss.
Yeah. And here you've got on the current, if you had current orders, this pops up and you've got working. So these stop losses and take profits are working the whole time, like you're constantly looking. Okay, so yeah, sorry. If you go to order, then this thing on the right pops up instead. So click trades there, orders there. Can everyone see that? You might not be able to see it. It's very easy on your phones, but so next, so click trades one option, which is what we were doing before, which is when you buy at the market price, and you can also order as well. So with order, has everyone got that up on their computers and stuff? Yeah. So with order, basically you pick a price that you think this stock's worth. Like you might do a load of analysis, like Gonzo, do you want to explain? Because Gonzo's done some limit orders and stuff before.
So for example, you analyze a company on the Bloomberg terminal, and you decide that you want to buy the shares at £100, but the shares at the minute are at £105. So because you think that the share price might go that little bit down, and then from there it's going to go up, and you don't want to buy until the share price goes back to 100. So you put this limit order, the number of shares that you want to buy, and then the price you put 100.
So yeah,
and that's important because I made a mistake there at the last year.
Yeah, so you can do here day order, good to cancel order, IOC. I can't remember what that means.
Normally we would put that GTC.
Yeah, GTC.
Because the day order means that order will be put only for that trading day, but the GTC means that could happen in a month's time or so. So you are just patient, and if it happens in 1 month, in 2 months, the trading account will trigger the order.
Yeah. Does that make sense, that bit? Okay.
Which is quite important to me, more than just buy and sell the stock straight away.
Yeah. So other things you can do, if you don't like candlesticks, you can do lines instead. Personally, I think candlesticks are better, but it's obviously preference. So the lines just show the same thing. So orange is it's falling, blue is it going up.
I like lines.
Huh?
Lines are better.
Do you reckon? Okay. Well, either way should go. Indicators. Back to indicators again.
Put a simple moving average.
Yeah. So indicators, you can go down SMA. Does everyone remember what simple moving average is? Do you know what simple moving average is?
Standard moving average.
Yeah, simple moving average or standard moving average or whatever you want to call it. Do you remember?
The average.
The average change of price.
Of, for example, period 20 of the last 20 trading days, and it gives you the average, and that tracks.
Yeah. So say you've got. Sorry.
Put it and explain. Yes.
Yeah. So say so I'll put a SMA 20 on there. Let's just change to days. It's easier. Okay. So basically, how simple moving average works is, so say you start on the first day and you've got a 20-day simple moving average. So the next 20 days, it's the average price over those 20 days. Yeah. So then when you went, those first 20 days, then when you get to day 21, the first day gets knocked off, and then you take day 21 and then find the average over those new prices. Then the next day comes, you're on day 22, drop off the second day, 22nd day, and you got an average. Yeah?
Yes, but I mean, if we take this point, for example, the green line is taking the average of the last 20 days.
Yeah.
Okay.
So this point here is taking 20 days back from there, but you can also, if you want to do a 50-day or 100-day or 200-day, obviously it's completely up to you.
The 200-day one is very, very popular.
Yeah, because it's good to like compare the two, because like there's an argument that if you do a 200-day one, it's not as good because you're basing your decisions on prices that are 200 days old. So a lot's changed in 200 days.
Let me. I mean, and these things work. For example, this one. This one is 200 in the Nasdaq.
Yeah.
You have there almost to the tick, and this was last Friday. So the Nasdaq opened the session just at the 200 moving average, and then it went up.
So it's showing like even though markets went so bad last week, if you go back onto it, it went back onto your thing. You still, so even though the markets were so bad last week, the simple moving average for the 200 days is still going up by over 200 days.
Which is very positive for the market, at least for the Nasdaq.
Yeah. So even though things went so south, on average over 200 days, we're actually not bad. But basically, just means that the previous gains have just been cut out by last week mostly. Okay. Is there any other questions? Any other main things?
I would say here, I mean, we don't have to put any name. We just can mess around here with stocks and ETFs. So if we go to Nasdaq, for example, or the New York Stock Exchange. So here we have 3,000 stocks. I mean, it's not just the S&P 500. You have the Russell 2000 and all of that. So you have here stuff. Well, and the same for the FTSE 100. With, I mean, not FTSE. It could be. Let's see. 800 stocks. So the same. You have plenty here to choose from. Any questions, guys? I think more or less.
Yeah. Any questions on the platform then before we go on to the main stuff? We're conscious of time. I don't want to keep you guys here too.
We still have half an hour, no?
Oh yeah, true, yeah. Oh yeah, I forgot we started later.
So let's carry on. I'm going to talk quickly about... this. The other day I was reading BBC News and I found this article which is very worrying to me. And look what the article says. Guys, pay attention just for a second, because this is, I think, quite important. Young, Welsh and pretty much 20 years old online trainer who makes up to 200,000 a year. Ooh, I would be very, very scared when I read that. Online trader actually makes tons of cash. Ooh, I would start running away from this guy. Then he spends his cash on cars, and currently he owns 4, including a VI8 that costs around £150,000. What I mean by this, that this doesn't happen. Don't be fooled by things like this, because this can take you into losing a lot of money. So stories like this, which this guy talks about when he failed his GCSEs, someone has to tell this guy that there is something that is called probability, and that if we put, for example, if we make an experiment in ex ante, and we make 100 accounts, for example, and we just tell somehow, some kind of algorithm to the 100 accounts to place trades randomly, after a year, the accounts will have done something. So, do I have anything to draw? No. But imagine we put the 100 accounts, we put them in, is there a pen? Not, yes. Let's do it quickly this. Do you remember, guys, something like this, maybe from your A-levels? I guess so, no? So, most of the 100 trading accounts, this is, let's say, 0%. So after a year, the accounts got no money, stay there. So then you have more or less the median or the mean, and here you have maybe accounts minus 20% and plus 20%. So someone has to tell this guy that out of millions of traders in the world, just by probability, there will be people here that are making 100%, but that doesn't mean first that they are good. I mean, with things like that, showing off his 4 cars or whatever. No, I mean, absolutely not.
He may know what he's talking about, I don't know.
But what I mean is that just by probability, if we put random accounts with random trades, you will get some accounts, maybe 1 or 2 of those 100, that will make a lot of percentage increase.
On the typewriter argument.
But that doesn't mean anything. We will need to put that into a much longer time frame.
Yeah.
And when we put that into a much longer time frame, these outliers here will come back to this area. The same for these ones will come back to this area, back to the mean.
I mean, those guys don't even have any money to come back. So.
Yeah. I mean, maybe this.
And that is what I wanted to say. Okay. Sorry, guys, because it's important that someone tells you, guys, don't be fooled with this trading thing, because I always say in the market it's very difficult to earn money and very easy to lose money. There we go.
Okay. Right. So I know people. I don't want to repeat what the FT says, because I'm sure you probably read it as well. But basically, last week coronavirus hit. Well, basically, there's a lot of cases in Italy, and people suddenly realise, right, well, if it's hit Italy, then that means it could hit all the other developed economies as well, which basically just triggered a market correction. So the markets fell by over 10%. The worst day for US stocks.
It's hit New York as well.
Huh?
It's hit a bit.
Yeah, but I mean, I think the main thing was that there was like 1,000 cases or something in Italy, and everyone was like, oh shit, like it can actually really badly affect. I mean, I think UK's on like 60 odd cases now as well. Like it's going everywhere, but I think obviously people suddenly realise it's a lot worse than feared. And it was the 3rd quickest correction, so to the 10% below recent peak in history. The previous fastest 2 were in the 1930s, the Great Depression. So it's pretty significant.
One question was, why do you think that is the 3rd biggest or quickest correction ever? Any idea?
Uncertainty.
Yeah, it could be. What I mean is that the market goes down that quickly because how steep this is.
Yeah. Like
if you compare this, a much more kind of good upside trend to this. Oof.
Like we're in a huge we were in a huge bull market, so everything's going up. So at some point it's got to come down. So the amount of gains we've made, then at some point it's got to come down quickly, because there's a huge argument that assets are incredibly overly priced. And maybe still they are now, but it's definitely not as bad as they were before last week.
And there is a famous phrase that says that the market goes up through the stairs and then comes down from the lift. Okay, this one is mine. Okay, that's the quickest thing, but very important that there have been many more drops, like pretty big drops in the S&P 500 in the history. And here we have 2008 in 5 days straight, minus 19, 2, 3, 4, 5, 6. So 6 weeks in 2008 with drops. At least this is not correct. It was 13% or so, because this I think was Thursday last week, or I don't remember, but this was 13. So 6 weeks in 2008. Then of course you have the Great Recession and this 1987 with, well, look at this. But just to put in perspective, it's important always to put everything in perspective. Is this big, not big? Let's compare the data with historic data.
But it could be that there's still the worst to come. It could carry on.
Yes, of course. Next one. This one is interesting as well. Maximum intra-year drawdowns. So 2008 minus 48%. Look at 2017, just nothing, no volatility last year. Last year we had pretty much nothing, something in June, July, and this year, yeah, minus 13. But as you can see, minus 10, minus 12, minus 20, minus 16, minus 27. Yeah, this has been a big shake, but we have some other pretty big intra-year drawdowns. And then the next one, no, actually I had another one. Yeah, this one is very interesting as well. This one shows how much you can go down in a year, but finish the year up. And one of the most striking cases is this, for example, 2009, for example. So the market went down 28% at some point during the year, but ended the day plus 23%. Or this is probably 2018, yeah, the December 2018 probably. So 20% down, 6% down, but you have plenty of cases in which the market went down quite significantly, but then ended the year with a very good percentage gain. Then this one is a very funny one. You might have seen it on a Facebook post this week. Question, guys. Where do you think we are at the minute? I want to go one by one. We'll start there at the back.
There's no wrong answer.
Really. No. There is no correct or wrong answer. I mean, I guess that because we've come down, we are somewhere in between here and here. I mean, we are not going up, obviously, at the minute. I mean, if we count Friday and today and yesterday, yes, but no, we are talking maybe about 2-3 months. So,
Sell or
so which number more or less? Or in
either 11 or 12, I don't know.
Okay.
Let's say 11.
So sell. So we are quite at the bottom. More. Yes, everyone.
Going way down.
Okay. So quite at the bottom. Okay, more.
9.
Okay, interesting. More?
Probably 10 or 11.
Okay. I like that. More?
1 as well is going way down.
Okay. More?
I would say 10 and 11 as well.
Between 10 and 11.
I'll say 11.
It's okay to sell. Okay. And?
12.
12. Okay, good. So, would you have sold your stocks Thursday last week, guys? What do you think? When we were maybe 10% down? Because I mean, what this shows is that we investors, I mean, this was maybe 2 weeks ago, this area here. So we start going down, and Wednesday, Thursday, last week, we are in this area, more or less, where people start to panic and to sell their stocks. And that means in the very short term, as we saw last Friday, yesterday and today, that we can come back. Or if we are taking a longer time frame, could mean that we are still from that 9, 10, 11, and there is plenty more to go, maybe to a 25-30% down. And of course the short-term investors will be gone way ago, but the ones that can put up more drawdown are still, so yeah, very interesting.
I can that might be a good time, whilst we've just done that slide, is to look at our portfolio and discuss what we think we should do. So have you got a comparison? Yeah. So now, so we started with €2 million, 1937. We were on 2105. I think we were even higher than that, maybe a bit before that as well. So.
Okay. Sorry. Another thing, guys. What are the differences? Two big differences, I think. Anyone? So that was 2 weeks ago. Now, I mean, they are simple answers. So, good. We had, I think, 18 or so stocks. Now we have 3, 6, 8. Great. Another thing, another difference.
The amount of stocks that are profit.
Yeah, good. Yeah. Those two things are, I think, the biggest thing. Why did you think that? I mean, the one of the that are in red is obvious that the market went down, and most of the stocks are in red, and we were in blue 2 weeks ago. But why do you think now we haven't touched anything, which is maybe not very good, man. We haven't. Let's say that we haven't touched the platform for the past 2 weeks. Why do you think that we have now less stocks in our portfolio? Anyone?
Stop sell.
Stop losses. Yeah.
So
Okay.
we had one thing that I want to say, we had some stop losses that were triggered, the stocks disappeared or sold, so we don't have them anymore. There is something important to learn from this, is that you might think, the market went down until Wednesday, Thursday last week, our stop losses triggered, so we lost money, and now the market has come back up, and the indices have made new highs. So I shouldn't have put the stop losses. No, that's a big mistake that we investors make most of the times at the beginning, because we are supposed to be amateurs, or I mean new to this world. Always stop loss, and you will not get into big trouble, which is very easy to get. For everyone.
Okay, so basically we're just going to run through quickly like what we've got, just in case people don't know. And I was thinking that maybe we just discuss for five minutes or something, if first of all, has anyone got any companies they want to invest in, and second of all, what you think our strategy should be to try and, like, if we should just cut our losses on some of these here, or whether we should if we should short stuff or long stuff or whatever. But anyway, so this is an insurance company that Gonzalo picked at the start of the year, Berkshire Hathaway, Warren Buffett's investment company, I suppose if you want to call it that. This is our European ETF financial companies. This is one of Gonzalo's insurance companies. This is an ETF. Oh, does anyone know what ETF means? Everyone know that?
I don't know what the full form is, but like you can't trade it on a day-to-day basis. It only happens like towards the end, and
Yes.
it's
So
like a bunch of stocks together.
yeah. So it's basically
That's an investment fund. An ETF is kind of an investment fund, but that can be traded at any moment during the day, like a normal stock.
Yeah. So like with an investment fund, you we'll be gone in 10-15 minutes.
Yes. And again, we couldn't book the room through the system.
Oh, you were here last week.
Yes.
Yeah.
Oh, you remember.
Cheers.
Will be
Can
done.
Yeah. Cheers. Thank you. So with a fund, you're like picking the exact companies yourself, like a fund manager picks them. With an exchange traded, it stands for exchange traded fund. It's like tracking an index. So it's tracks the S&P 500 or it tracks the FTSE 100. It's got like a little bit of every single company. So basically it is like a fund, but you can actually trade it from day to day. Whereas an investment fund, it's a bit more difficult to do that.
I mean, an investment fund has a price just at the end of the day, and that's it. And if you buy the investment fund, you get the price at the end of the day.
PSCF is our small cap financials companies in the US. Rathbones, so this one, the stop loss got triggered on this, and a good job I did because it carried on going down, down, down. But then it's a company that I pitched in the last meeting. If you want to look at the pitch from now, I think I posted on Facebook. I just put that back on today, which hasn't performed very well today. But I thought it still seemed pretty cheap, and it's a decent company. Ruffer, this is an investment fund. So these guys invest in certain companies, like they've got gold and bonds and all sorts. And I mean, it's like pitched as like a doomsday investment fund. It tends to do better than everyone else in times of uncertainty. Hence why it's not gone down very much at all. I mean, it was looking worse last week, but today it's performed pretty well. And VFH, I bought 50,000 more of this morning when it looked pretty cheap.
Oh, really?
Yeah.
Okay, I'm going to kill you.
This is our S&P 500 financials ETF. Okay, so that's what we've got.
And we have a month left or so?
Yeah, if that, like 3-4 weeks to go. So basically I'm asking, what do you guys think we should do?
First question, raise your hand if you think that the market is going to go back up more or less to the levels of last week. So 1, 2, 3. Who thinks that the market is going to go back again? Nobody. Who thinks that the market is going to stay at these levels more or less? Good.
It will get worse.
And you 3, I guess, that the market is going to go down more. Good.
Okay. So
I think the same idea. I think we should buy quality stocks, so buy strong stocks. Sell if we want 1 or 2 very weak stocks.
Why don't we buy gold?
We can also
Gold's
buy.
expensive right now.
Yeah.
It's really expensive. We get more expensive.
But yeah, if we think things are going to get worse,
the
then
thing is
gold
that I
will go.
really don't. I mean, we can do it. I really don't like commodities because I mean, to me, it's just a 50% and see what happens. But I mean, in my opinion, we should get rid of the ETFs right now, if possible.
Okay.
But that's only my opinion.
What does everyone else think about that? So basically just cut our losses on the 3 ETFs.
And the thing is that we have 1 month left, and that's quite short. So and the thing is that the market, and particularly in the USA, has come back up quite a lot Friday and yesterday. So it's a tricky one. It's a tricky one.
Yes, this is like the thing with the virtual fund, because you can do sort of all the fundamental, this sort of thing I've realised, you can do all the fundamental analysis you want in the world, like looking at ratios, revenue growth, products that companies have got, and then coronavirus comes along, or the US-Iran potential war, or there are just some of the things that happened this year. What else has happened, like US-China trade war, anything like that. That's just what really screws us in this. Whereas like, if you're a fund manager and you're investing for like 10 years in a company because you think it really is something good, then you can weather those shocks, whereas we can't weather the shocks.
Yes.
So we're basically trading on macro.
News headlines.
Yeah, basically news headlines. Yeah.
Yes.
But I don't think we can short ETFs. So we'd obviously have to pick like biggish.
Some of them you can. I mean,
Can you?
There's an S&P 500 tracker, the SPY.
Oh, yeah.
I'm pretty sure you can short that.
Okay.
Or actually, there must be inverse ETFs as well.
Yeah.
Probably.
Oh, yeah, maybe,
I guess.
So
which an inverse ETF is kind of goes opposite to what if the ETF tracks the S&P 500 up, so that same ETF inverse tracks opposite that.
What's the difference between shorting an ETF and buying an inverse ETF? Is it like
same thing.
So I mean, that's weird, but you could buy an ETF because you want to go up. You can short an ETF to do this. You can short an inverse ETF to go up.
Right, that's the same thing. Why
Yeah.
do you have two different things for the
So probably there is something to do with the fee that you pay or something like that, or
Obviously,
that
to
it's
short
more
something-
interesting for you to do something or the other.
Yeah. When you short something, you borrow it off somebody that's already got it, right? And then you sell it, and then you have to buy it again to then give it back to them.
Yeah.
So you've got to find someone who wants to lend it to you. Whereas if you've got an inverse ETF, you can just buy that from whoever's Vanguard or BlackRock who have created that ETF. So you don't need to find anybody to lend it to you. Does that make sense?
Yeah.
Yeah. So I think that's the reason for having them. So because a lot of people, you might struggle sometimes to find somebody to lend you the stock to be able to short it.
Okay, we have 5 minutes. I think we can decide.
Okay, so
The-
we're going with that. We think things are going to get worse. We're going to cut our losses on the ETFs.
Okay.
Is that right? Is that what you said?
I mean, there were 5 saying that the market is staying the same.
Oh, for staying the same.
Yes. So
So maybe we
You
should.
just went all the way down. Probably should short.
Current losses on one of
It's at
the
7.24 in
okay.
Yeah, I reckon. Yeah, close down the European ETF, and then maybe reduce our holding in the S&P 500 ETF.
I mean, we should do something to the one that is losing the most. We should do something to the stock that is winning the most,
Yeah.
and
Do you
that is,
wanna
I
go-
think, the idea, the
Okay.
right idea. I mean, it's difficult to have the right idea right now, but
Yeah. I mean, the S&P 500 one at the bottom, isn't that percentage-wise?
it's not that. It's
doing better
okay,
than the
okay,
European
okay,
one.
okay. So yeah, we have to be careful with that. Thank you for that, Matt.
It's all right.
Okay, let's finish with it. I want to show you something before we go to the stocks. And anything else, Matt?
Well, I was going to go through the news, which I might try and do quickly in 30 seconds. Things
Okay.
that happened. Market correction. Italy yesterday markets came back up because Italy said they're going to inject a load of money. Fed considering a rate cut. Now they're saying they're going to do a rate cut. South Korea stimulus, basically going to put money into the economy, good for markets. OECD said that coronavirus could halve world growth, really bad, from 3% to 1.5%. UK government said that 20% of the UK workforce could be off sick. US election coming up in November. Today's a big day. What day is it today for the US election? Super Tuesday. 14 states voting on who they want to be their Democratic candidate.
Okay.
Lots of people dropped. But I don't know how to say his name. Buttigieg. Yeah. The two Democratic candidates seen as moderates have dropped out of the race, which is a boost to Joe Biden because he's the other moderate. Basically, Bernie Sanders is winning, then sort of Joe Biden, and like those people at the bottom are other moderates. So the more moderates that go away, the more votes Joe Biden's going to
Bernie's
get.
still going to win, just whether or not he's going to get a majority.
Yeah. But I mean, it depends what happens today, I suppose. Anyway, Bernie Sanders is bad for markets because he hates Wall Street and he hates bankers and he hates everything apart from free healthcare and stuff like that. Okay. Financials update. Bank index posted this article in the group earlier, 20% down. So banks performed a lot worse than the actual market as a whole. So we actually did pretty well not to lose a ridiculous amount of money. Activist investor Ed Bramson.
Just a second. We didn't have plenty of banks, really
True,
banks. No, Lloyd.
We had our financials index. I suppose
Okay,
we
yeah,
should do
fine.
everything. Ed Bramson basically runs a hedge fund, activist investor. Has bought a little bit of a stake in Barclays a couple of years ago. Hates Barclays CEO. Wants to get rid of him. UK sort of trying to sort out a trade deal with the EU about the financial market access. Rishi Sunak, the UK Chancellor, reckons this should get sorted out by June, but EU are basically being really annoying about it. Finabla, anyone heard of them? Listed on the London Stock Exchange, fintech, forex and payments systems. Their share price has been absolutely plummeting. They had a cyber attack, coronavirus, because it's the forex side of things, people aren't travelling as much, badly hit. Barclays bankers cleared of charges related to the financial crisis, Qatari investment. So in the financial crisis, like the likes of RBS and Halifax Bank of Scotland got bailed out by the government. Barclays went to the rich guys in Qatar, asked them for money instead. They gave them money. There was some dodgy stuff going on. Money was changed hands. The Serious Fraud Office in the UK tried to prosecute them but failed. Okay.
It's unbelievable to think that there is still stuff going on with the financial crisis.
Okay, so that's that was through. We spoke about stop losses and stuff. This is just an example of showing you well has happened. Big candlestick. Now, are we going to? Oh, yeah, I'll talk about that next time because I don't have time. How are your stocks done?
Just one thing, quick thing that I want to show you. So, as I said, when you make your fundamental analysis and you put all your EPS, P ratios and all of that, try to get as many things as possible. So try to have the big picture of what you are doing. Don't just think, okay, I think this stock is going to go up, so I'm going to find some kind of ratio that is supporting my idea, or some kind of piece of news that is supporting, of some kind of analysis that is supporting my idea. No, take the whole picture of what you are doing in general. And this past weekend, I mean, I like doing a kind of spending time with these things. And this past weekend, I just spotted something that seemed so striking. So I'm going to take a screenshot of this. This is the Nasdaq since 1996, and this is the 2000.com bubble. So if I go to Paint and I paste this and I do this, this is the big drop last week, and I do this. Okay, it didn't work, fair enough. Sorry guys. So I take more or less this, and I take it and I put it here.
Well, you should work for the Financial Times.
Isn't it striking, guys? I mean, look at this. So that's why, that is what I mean, that is important to take the whole picture of everything. So do your research on Bloomberg, take a trading platform, put the whole history of the chart, and you learn a lot. You learn a lot, and one of the things is that we didn't know if the market was going to come down, but there was something so similar that happened in the past, and so far it's happened the same. Then we don't know, because nobody knows what's going to happen in the future, but there we go. Okay, that's it. Let's do, okay, where are we?
Let's get up quickly before that woman comes back and kicks out the room.
Okay, so my Tesla share is, oh, look at this, that's rubbish. Minus 44k. So I went down from 26 to 44, so 18. Okay.
Minus 1,000 euros.
Minus 1,000. What did you get? More or less. Okay. More. There is a prize, guys. Come on. Minus 24. Minus 77. Minus 14. Minus 45.
Wow.
So you're gonna be the winner. No? Minus 1,000.
I guess the point is, don't put any of your real money on trading accounts.
If you give me a few days, it'll go up.
Yeah. I bet.
No, I think I didn't buy any stock there. Anyway, yours?
It's gonna take a long time to
Okay, no,
put
fine.
it on my lap.
And some yours?
Mine's 18K.
Okay.
Sorry?
You said Mastercard, yeah.
So well done, mate.
Cool. So we'll get some trades sorted out, sort out that portfolio to align with what we said. Fund meeting next Tuesday.
You could have won this, guys. Good choose. Good choose.
Thank you for coming.
Thank you for coming,
I'm
guys.
sorry about messing up the meeting yesterday.
If you have any question or you want to stay talking about financial stuff more,
Yeah.
Matt always runs to his house, but I'm always here for anyone that wants to carry on talking about the financial markets.
Yes.
Thank you for coming, guys.